Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. In today's episode, we're going to talk about shorting Tesla. Now, don't freak out. I'm not shorting Tesla, but someone I know is and has already shorted Tesla. What I want to talk about today is a private conversation that I've had with one of my dearest friends. He's absolutely an amazing person. I was at his wedding. He just had a beautiful little girl, and I've known this individual for a very long time, since middle school, I believe. He's also one of the smartest people that I know. He's got a background in finance. He's got a MBA in finance and supply chain management, I believe. He's got a wealth of knowledge. But when it comes to the topic of Tesla, we fundamentally disagree. And so I thought this would be a fun episode to make where I talk about, some of his objections or the questions that he poses to me and how I rebuttal his questions or his doubts within Tesla. So I'm not going to talk about his name. I'm going to keep him anonymous because honestly, his name isn't important. But what I want you to take from this episode is, how I look at things, how I think about these topics, and how I tend to refute the naysayers of Tesla. I've thought about, maybe in future videos, I'll have him on and we can talk about it and just kind of have a lively chat between the two of us. But the bigger thing to take away from this episode is that even though him and I have vastly differing opinions of this, it does not mean that we're not friends. It doesn't mean I don't like him. I still love him no matter what. He still loves me. We just have a healthy difference of opinion. And that's good. We want that. We want the world to look at things in different ways. If not, it's a very boring world. But with that said, before we get into talking about shorting Tesla, do me a favor, hit the like button, hit the subscribe button, ring that bell, and let's get into it. This all started about a week and a half ago, where he obviously knew that I was a big Tesla fan and bull. I'm not sure if he knew how passionate I am about Tesla or how invested I am into Tesla, but he had some idea, right? Again, this is a dear friend of mine from middle school, high school. And so it's not like I see him every single day. We live in different parts of the state, but we stay in touch. And I was just at his wedding, I think about a year ago now. But he reached out to me and, he asked me what my thoughts were, and he informed me that he was actually short Tesla. Not in a traditional sense. He was short by having a lot of these puts, these very outside of the money puts. So he believes very firmly that Tesla is going to go down. And so, when I asked him why, and again, this is about 9 days ago, the first thing he said to me was that Tesla is overpriced. And so that's where we're going to start here. We're going to talk about Tesla being overpriced. And so I'm going to review some of I took some notes here because we had a long conversation about this. So I'm just going to talk a little bit about this. So when he mentioned Tesla is overpriced, the first thing that I brought up was my model, right? And I've talked to you guys about my model a few times. I've shown it to you guys. And based on my model, Tesla is not overpriced. And so, I quickly, posed to him, what I do, right? And so it's very, if you look at it from a high level, we take the average selling price of Tesla, right? Now it's $52,000 a vehicle, average selling price. We look at a 30% gross margin. We assign a certain multiple to it, and you get your valuation, right? And that's a very high level, right? There's other things that go into it. You've seen my model, you guys know this, but this is where it starts. And when I just do the basic math of it, it tells me that Tesla is very undervalued, not overvalued. And so with this conversation, I was just trying to explain to him how I get to where I get to. But in reality, even these numbers, I don't like to really debate with someone with things that are subjective. And so, for example, what is subjective is whatever multiple you assign to that company, right? Do you assign a 50 PE? Do you assign 100? Do you do a 125? Maybe you do 25, right? How do you determine that? And that becomes subjective. The average selling price, not subjective. The gross margins, that's not subjective. And so I like the concrete numbers when I'm debating someone or challenging their thoughts on Tesla. And so I like to quickly get away from the overpriced conversation because I don't think it's a healthy debate. I think it's unhealthy because there's so much subjectivity to it that I don't really think we get anywhere. We can look at Amazon, we can look at Apple, we can look at GM and Ford, and we can rationalize and come up with ideas of why we should have certain multiples, but at the end of the day, it's subjective. So with something like that, I quickly tried to move off of it because I don't think we're going to get anywhere. We're just going to spin our tires. But what I iterated to him is that regardless of what you think the multiple should be, what's undeniable and what's factual is that Tesla's growing at minimum 50% year over year for the foreseeable future. Okay, as in the last few years, the last 5 years, they've grown faster than 50% year over year. They've already said that this year with just Fremont and Shanghai, they can easily do 50% year over year. They have Berlin, they have Austin coming on. Right, it's very easy to see the pipeline and where it's going to come from. We can see what the demand is. We can see how long it takes before you'll get a delivery of a Model 3, Model Y, SX, etc. So that part is solid, right? So we know that the growth is there. We know the demand is there. And so when you talk about something being overpriced, if we move away from the PE conversation and we look at what they're selling for, we look at the gross margins, we see what the demand is, and we start to calculate that out, it becomes a very hard notion, in my opinion, to say it's overpriced. So then we moved on to his next point. And his next point was whether or not the luxury auto demand will remain when payments go from $600 a month to $1,000 a month. And there's a few things on this, and I get his point. His point is, will there, one, be enough demand for it at those prices, and two, is there a big enough total addressable market for those prices? And that's a valid point, right? It really is. But when you start to peel things back, peel the layers of the onions back, you realize that everything isn't just as they look on the surface. So what do I mean by that? Okay, well, first of all, if we talk about just a monthly car payment, $600 to $1,000, well, what is a current $600 internal combustion engine vehicle cost when you include the price of gasoline? Well, I did this exercise. So I took a conservative number based on what today's gas prices are, and that's $3.34. So the reason I did $3.34 is because it actually gets us a nice number. So if we assume that a vehicle has 15 gallons to fill up, right? And we assume $3.34 per gallon, that's $50 every time you fill up. If we assume you fill up twice a week, that's $100 a week. $100 a week by 4 weeks in a month, that's $400 right there. So that number that he was talking about, going from a payment of $600 to $1,000, well, if we're talking about internal combustion engines, well, those are already at $1,000 if you include gas, right? And as you know, with an electric vehicle, you don't incur any charges for gas, right? Maybe you have an electric bill that costs you $5, but it's nowhere near what you're seeing there with the gasoline prices. And keep in mind, the number I use is conservative. It's low. I think right now the national average is $3.46, and it changes every day, but it's just a good way to think about it. Now, it's also important to note that the average car price right now, the average new car is $40,000. $40,000. So when you throw into this, the fact that a Model 3 starts at $46,000, and then you add in how much you save from gas, right? If we're doing $400 a month, right? $400 a month, you multiply that over 12 months, right? You deduct that from that 46,000, right? You start to see how this math actually looks very reasonable. And all that to say that we haven't even accounted yet for any maintenance that goes on with the vehicle. As we all know, electric vehicles have substantially less amount of maintenance needed, right? There's no oil change, there's no spark plugs, there's less change when it comes to your brake pads, right? There's less moving parts, less chance for things to break, right? You don't have any like transmission oil you have to change out, right? There's no timing belt per se. So a lot of these things just go out the window. And so when it comes to talking about the luxury demand, the amount that people pay, well, right now, the amount that people pay for a internal combustion engine is really hidden, right? We think just about what we see for that vehicle monthly payment that we get a loan for, but we forget about all the other ancillaries, right? We forget about the amount we're paying for gas. We forget about all the maintenance we have to do. You add all that in, and right now, electric vehicles, Teslas are actually a lot cheaper than what it would be for a standard run-of-the-mill average selling brand new vehicle at $40,000 a year. So that kind of, was the end of that conversation that I had with him. And, that leads into today. So this morning, I get a text message from him, right, 9 days later, asking me, so has your thesis changed for Tesla? Has my thought on what's going on with Tesla changed? And to me, and as you guys could probably imagine, I was kind of laughing, thinking, no, it hasn't changed. It's been 9 days. What are you talking about? But again, he doesn't know, everything, all my thoughts when it comes to Tesla. I have a YouTube channel, but it doesn't mean he watches everything I do or even, watches it. I don't even know if he's aware that I have a YouTube channel, to be honest. But it was funny to me because, as you guys all know, I'm invested for the long term, right? I buy Tesla not for 9 days from now, not for a year from now, not for 5 years from now, but for a decade, 2 decades from now, right? That's how I'm looking at this investment. And so, and then he followed that up, besides saying, has your thesis for Tesla changed? He also asked me if I look at any other stocks. And so I actually answered him with the second question first. Do you look at any other stocks? And what I told him was, I look at many stocks. I look at a lot of stocks, and I do a lot of analysis, and I try to explore honestly a myriad of stocks. It's just the engineer in me, right? I like different tech. I think it's interesting. I get into it, right? And I get passionate about it. So it's just a natural thing with my personality and my interests. But the problem is, I've yet to see a single company that can offer the value that I see with Tesla. And so although I look at many, many other companies, many other stocks, I have yet to see anything on the public markets that would be worth investing in the way I am with Tesla. So for that reason, I'm all in Tesla still. Now, as far as my thesis with Tesla, I kind of told him what I said a second ago. My view is long-term, okay? 9 days will never change what I think about Tesla. The only way 9 days could change would be if something drastic happened where Tesla says, we are no longer looking at doing full self-driving, or we're not going to make electric vehicles anymore. We're only going to work on the Optimus bot, and we're going to take a loss every quarter until that's done, right? That'd be the only way my thesis would change, and those are not realistic outcomes. So then that led to a little bit of coming out of his own thoughts. Okay, so then he sent me a text saying, responding saying, did you see how Facebook got obliterated for a single low growth quarter? And of course I said, yes, of course I saw that. And he said, I feel like it would only take one for Tesla to go down to $300. And, I mentioned this a few episodes ago. We are clearly in a stock pickers market now. We've moved away from index fund type investing, and this is all about performers now. You either put up or you shut up. You either put up good numbers and a good forecast, or the stock market is going to punish you relentlessly, and that's what happened with Facebook. Now, with Facebook, I've been saying this for a while, and maybe not on this channel, but I've said it with friends and everything. In my opinion, I think Facebook is dead. Okay, the only thing I see surviving within Facebook is WhatsApp and Instagram, which is an issue because Facebook is the core of Facebook, or Meta now, right, as they say. But here are the problems with Facebook, and honestly, it's going to be a problem with Instagram as well. TikTok is here. TikTok is the new platform everybody's on. Okay, Facebook is what MySpace was, right? The second all your parents are on a platform, that's when you know it's kind of dead. Right, so Facebook has been dead for quite some time, and now we see all these parents getting onto Instagram, and it almost makes you understand, okay, well, Instagram is on its way out. And that's not me trying to predict what's going to happen in the future. That's just me noticing trends and telling you what I see and what may or may not happen. Maybe I am predicting the future. Who knows? But TikTok's not the only thing that I think is eating into Facebook and Instagram or just Meta as a whole. But something that people don't talk a lot about is YouTube. YouTube is eating into Facebook as well, or Meta. And why do I say this? Well, it's not so much just the YouTube content, but if you think about TikTok, right, as the social media company, YouTube has their own kind of version of TikTok called Shorts. And these Shorts are very similar to TikTok. Now, if we look at Instagram, the only thing we have like a TikTok within Instagram is when people repost their TikTok onto Instagram. That's it. Okay, so to me, that's very interesting that now even Google is eating into what Facebook does as a social media medium. And then you throw into that what's happening with Apple, where they're no longer allowing Meta or Facebook to essentially profit from users' data without their knowledge of it and being able to use that to extract it for ad sales and things of that nature, right? We saw what happened on their balance sheet. That was a big, big hit for them. And the last thing I would say is that the fact that Facebook decided to rebrand into Meta, a technology that is, even Mark Zuckerberg is saying is probably, 10 years out, if not more. To me, that's concerning. To me, that is the sign of a company that is trying to go ahead and sell the future because they are worried about today. And so they're trying to get you excited about the future instead of focusing on what they have today, because what they have today isn't generating profit anymore. Or it is, but not in the same way we thought it was, right? They want people to invest into Meta for the long term, for the next, 100x, next 10x, etc. And to me, it's a red flag. Now, you can make the argument, well, Tesla does this all the time, right? Tesla talks about products before they're out and they're ready. Well, you got to get nuanced. Tesla doesn't really do a launch. They more so introduce a product that they're working on, and then they go ahead and they work on it. They talk about the different technical specifications that they're working on, and they use it as a recruiting tool in large. Now, the difference is you don't see Tesla calling themselves Semi or Roadster or anything like that, or Optimus, or we're a new robotics company, so we're going to name ourselves this, right? Tesla's still Tesla. Tesla still has their main growth engine growing at over a 50% clip quarter or year over year, right? Facebook is seeing slowing user growth. Facebook is seeing diminished ad sales. Facebook is seeing pressure from Apple and from Google. And so Facebook, what it felt like is that they had to come out and create a stir, create some excitement behind the name, hence the birth of Meta. And so to me, it doesn't feel like the same thing. And so I don't think that looking at Tesla and Facebook, you can make a similar parallels, right? Not only is Tesla growing 50% year over year for at least the next 3 years, in my opinion, FSD should be coming out soon. We can see that it's a real product. We see the iterations. The metaverse, it's not really real yet. We can't really see it. We can't experiment. We can't see how it's iterating or progress. You can look up anything with full self-driving on YouTube and you can see how the progress is going. It's insane. On top of that, GM only sold 25 electric vehicles in Q4. Ford has halted production of the Mach-E as of, I think, yesterday, and I believe some of the lines for the F-150. So it's not like Tesla has all this competition that everybody has been claiming for the last 5 years that is coming, right? So on top of that, Tesla's biggest competitors are kind of back on their heels yet again. And just to bring it back to GM, Tesla had a higher net income this last quarter than GM did. Tesla's more profitable now than GM, selling less vehicles, right? Like this is what I'm talking about, right? We're at different points. Facebook is almost, at the end of their S curve is what it feels like. And they're looking desperately for their next S curve, right? Whereas Tesla is just getting started on this electric vehicle S curve. And then they still have the energy S curve. Then they still have the full self-driving S curve. Then they still have the robo-taxi S curve. And then they still have the Optimus S curve. And who knows what else they have, right? So Tesla is just like this juggernaut of S curves that we haven't even started to touch yet. Whereas Facebook is a whole different part of the cycle. So that's where that conversation led to. His next point that he started to transition into was talking about interest rate hikes and how it would hit a company like Tesla very badly. And so this is a hard one to tell, okay? And this goes back to talking about the macro environment, right? In my opinion, again, this is just my opinion, I don't think anybody knows what's really going to happen when rate hikes start to go up. Okay, whether it's 0.25%, 0.5%, we don't really know what's going to happen. Okay, it's very hard to predict what's going to happen in a macro environment with so many moving pieces. For example, okay, here in the States, we may be raising rates to try and battle inflation. Okay, so it makes it harder to borrow money because it's more expensive. But meanwhile, over in China, they just dropped their rates. Right? And the whole reason you drop rates is to stimulate an economy. And so China is trying to stimulate their economy even more, right? To make even more robust than what it already is. So what happens when China gets more robust? Well, guess what? You get more money behind you. You get more supply chains. You get more products. You get more output. So what does that do in the bigger scheme of things for supply issues? Well, it can alleviate it. So if China is doing this and the U.S. is doing this, well, how do they affect each other? At what point do we start to see the effects of each other? Well, we don't know, right? That's just a hard thing, and that's just one example. That's one ripple effect that we're talking about. Right? There's everything else, and so it becomes so hard to predict these things. Another reason why rate hikes tend to be bad is because it makes it harder for people to borrow money. At this moment, Tesla doesn't need to borrow money. Tesla has plenty of cash to do whatever they want to do. So it's not like they need to go out and borrow money at these crazy rates. So that's not an issue for them. And on top of that, when we look at a company like Tesla, they are extremely efficient. The point where something like inflation or rate hikes really start to affect a company is when you have a whole bunch of subsidiaries within it, or a better way to think about it, middlemen. Okay, so for example, if I have to go to this company to get certain actuators and this company to get, certain batteries, and this company to get the rotor for our motors, and another company to get, door handles, another company to make a chair, right? There's a lot of middlemen in this, and all I'm really doing is assembling all these pieces together as an auto manufacturer. Well, Tesla doesn't do that. Tesla is arguably one of the most integrated companies, vertically integrated companies in the world. So what that means is, one, they have lower costs because they don't have all these middlemen trying to get their piece of the pie. But two, it means whenever they want to make a change, whenever they want to iterate, for example, whenever they make a change into a certain product, maybe it's because the electrical engineering side is saying, hey, we need to do XYZ to have a better battery management system. So we need to move this over here and that over there. Well, Tesla's so vertically integrated that they can do all of that in-house. Whereas other companies, they can't tell another third-party manufacturer, hey, we need you to make this actuator different because we want to do something different with our battery, or we want to run these cables differently. They can't do that. Tesla can. Right? So all these things really start to matter. And when you're vertically integrated, that's where you start to see all the benefits. So again, I don't see these rate hikes. I don't see inflation really being a big headwind for Tesla. Is it going to hurt in the macro perspective with the stock market? Sure, maybe. I don't know. But as a company, fundamentally, I don't think it's really going to affect Tesla. I think Tesla will be just fine. And something else to think about. With everything happening with inflation, right, we're going to get a CPI reading on Thursday, which is honestly the really only notable news to be had for this week. So keep an eye out for that. We should get that around 8:30 in the morning on Thursday. And I think people are expecting 7.2, 7.3%, which would be a 40-year high for inflation. But keep in mind, inflation is driving gas prices higher. And so is, demand, right? Is driving gas prices up higher. Well, the higher gas prices go, the more that's gonna push people to go and buy a Tesla. All right, it's just inevitable. And then if Joe Biden does end up, just splitting up his Build Back Better plan to pass just certain portions just to try to get some win before the midterm elections, odds are he's going to try to pass the electric vehicle tax credit, which again, if you tell people, hey, here's $7,000 to $10,000 off on your Tesla, do you really think people aren't going to buy a Tesla? Right? I mean, and not just to mention, like, okay, maybe you think, oh, well, maybe people like Fords or GMs or whatever. Well, guess what? The only company that can really take advantage at volume to use those tax credits is Tesla. Right? There's really no scenario here that doesn't benefit Tesla. So I said all of this to him, and, it was just me essentially just, explaining to him all my thoughts with these topics. And then I decided, let's take a step back. And I highly recommend you do this with anybody who's challenging you on your thoughts when it comes to anything, really. And I think this is a healthy way to approach any debate. And so the way what I questioned him with, or what I asked him, was, what would make you change your mind about Tesla? So today, right now, you're short Tesla. What would have to happen for you to change your mind on Tesla? Because if we can't figure that out, well, then the debate's pointless. You're always going to be a naysayer, right? I can tell you what would make me change my mind on Tesla. Like I said, if they scrapped FSD, if they said, okay, we're not going to do any more electric vehicles, we're only going to focus on XYZ, if the batteries became a big flop, right? I mean, there's many things I could talk about on what would make me sour on Tesla. I don't think any of those things are going to happen, but it's important for me to be honest with myself and be realistic on what could change my opinion of Tesla. So with my friend, I asked him, what would make you not short on Tesla? What would change your mind? And so what he said was very telling, because this is how you can really understand where people's logic and their thesis is coming from. So I'll read these out to you. He said, if they can make a $25,000 vehicle that looks good and maintain high gross margins, that would have insane staying power. And if they can make robo-taxis happen, but I think others are ahead. Boom. Very telling. Now I know exactly where he's thinking. I know everything that he's thinking and how he's seeing Tesla. So this inevitably led into our discussion about full self-driving, right? And so I poked a little more, and he said to me, I don't think Tesla's on track to win autonomous. And he asked me if I have any evidence to, refute that. And he also said not using LiDAR when everyone else in the industry says it's mandatory is interesting. So what I first said to him is like, we need a level set. Your impression of the $25,000 vehicle is the wrong way to look at it. Okay, and Elon said this multiple times on the call. Fundamentally, right now, Tesla can't make any more vehicles than what they're doing. They're going as fast as they can. So the idea of introducing a $25,000 vehicle when they're selling every single $52,000 vehicle that they can make, and they have no supply left at the end of each quarter, it'd be stupid to introduce a new vehicle, a new variant at that point. It would make no sense. Okay, so we'll start with that. And even then, if Tesla needed to increase their total addressable market, they could just drop the cost of the vehicle, right? Again, they would increase their total addressable market essentially exponentially. So Tesla knows what they're doing. They have all this already figured out. But so then we start talking about full self-driving, right? And this is where the real value add comes. And his comment about LiDAR was very interesting. And it's funny because I haven't heard anyone talk about LiDAR in quite some time, and he brought it up. So for those of you who don't know, LiDAR is essentially what every other auto manufacturer out there is using, or anybody who's trying to solve the autonomous problem, right? The autonomous vehicle problem. Tesla has chosen to move away from LiDAR. Okay, Tesla's also chosen to move away from radar, and I'll talk about that in a second. But with LiDAR, the reason everybody else has to do it is because they don't have a big enough data set. And so this is the first advantage Tesla has, is their fleet. Tesla has over 2 million vehicles out on the road at this point with all the hardware needed for full self-driving. And all of those vehicles are essentially running what's called shadow mode in the background, and they're sending all the data back to the mothership that is known as Tesla. Now, all that data comes, it's billions and billions of miles of real-world data that they have. And using that data, they are refining what FSD is, right? And that's how they're iterating on it. Now, there's other things they're doing as well with their own rendering and things of that nature, but this is the real premise behind it, or behind how they have such a big lead, right? And it's these billions and billions of miles that nobody else can get because they don't have a fleet. So that kind of puts people in a tricky situation. And so that's really where LiDAR becomes kind of the crutch, right? Okay, so if I can't get all this data to make vision work, right? Because you need a crazy amount of data set to make the neural nets work, to teach it to learn how to use vision instead of having to use LiDAR, right? We don't have that data set, so we have to use LiDAR. Okay, so that's one. So when I was saying that to him, right, that's when he says it's very interesting that everybody else is in this space is saying you have to use LiDAR, yet Tesla's not using it. Well, that's when I brought it to him. Well, everybody was also saying that you have to have radar. Everybody said that. Everybody said you have to have radar in order to make this work. You can't get rid of radar. Well, what did Tesla do about a year ago now? Well, Tesla's been without radar. Tesla was able to use their neural nets. They were able to teach it, and now they don't have any radar. So they dropped the cost. They got rid of a component that everybody said they had to use. I mean, why does this keep happening, right? It's weird. It's weird. It's no different than when Elon said that, we're going to make rockets reusable and we're going to land them. Everyone said, oh, you can't do that. It can't be done. Well, it happened. It's happening with rockets. It happened with electric vehicles. It happened with radar, right? I mean, why do people think these things keep happening? So when I said that to him, I think that started to, I think his response to me was interesting, right? So at that point, it's like, okay, maybe we're starting to get somewhere here. And so then I also want to bring up, right, he asked for evidence, right? The best evidence I could give anyone on Tesla having the lead is the fact that, one, they have the biggest fleet that has all the hardware needed for full self-driving. It's got all the cameras, it's got all the sensors needed, it's got all of the computers built in with redundancy and everything. That's done, okay? On top of that, Tesla now has over 60,000 people in the United States using this software. If you contrast that to Waymo, to Cruise, to whatever Ford's doing, their Ford Blue, whatever, Mobileye, nobody else has 60,000 people. On top of that, all these other companies are working in little, 5 mile by 5 mile geofenced areas that have to have high resolution, HD mapped roads that have to be constantly updated, right? And they're essentially just working within these confined parameters in 1 or 2 cities. There's a Tesla in every single state. There's a Tesla in just about every single city in the United States with full self-driving beta. All right, so if you were to tell me, if I just show you those metrics, you tell me who's in the lead here. And by the way, they're about to introduce Canada into this as well. So when you just look at this from this point of view, it's very hard to argue that Tesla's in the lead. Now, I get it. All these other companies, they're paying lip service. Waymo has their autonomous vehicle. They're giving rides in Chandler, Arizona. And Cruise is about to do the same thing in San Francisco, but only from the hours of 11 p.m. to 5 a.m., of course. And it can't go over 25 miles per hour. Oh, and it can only go within a certain radius within San Francisco, right? If I have to give all of these, parameters, is that really full self-driving? Is that really autonomous vehicles? Or is that me just creating a virtual train track? You tell me, right? So these are the conversations I had. And hopefully he was able to see my point of view, and hopefully you can see some of the questions that he was asking and lead you to understand what he's thinking. Now, keep in mind, he does not follow Tesla the way I do. I'm all invested in Tesla. This channel is all about investing, but right now I'm only invested in Tesla. So I really only talk about investing in Tesla. Right. The only other thing I'll talk about is, philosophy on investing and spending and budgeting and things like that. But for the most part, I talk about Tesla. So I'm very knowledgeable of everything going on with Tesla, whereas he knows things at a very higher level because he also looks at all these other companies. So the amount of knowledge I have to be able to rebut a lot of these things, he may not have even heard about or be aware of it. So what's the point of this episode? The point of this episode is to show you that we can both be right, all right? It doesn't mean that you should invest in Tesla or not invest in Tesla. At the end of the day, you should make your own opinions and do your own research. But I wanted to show you how I approach it when somebody is a naysayer of Tesla, right? This is how I rebut things. I'm an engineer, so I believe very heavily in the data, in the numbers, in what things are doing, what's being delivered. I care less about things like a PE ratio. PE ratio to me isn't real. PE ratio is subjective. Okay, 60,000 FSD beta users is real. Tesla growing 50% year over year is real, right? Rockets landing, that's real. Okay, and so I find it very hard to not believe in an individual in a company that's doing things over and over and over that they say that can't be done. Radar being removed is real. They said it couldn't be done. They did it, right? People say you have to have LiDAR. Okay, we'll see. So that was the point of this video. Hopefully you see my perspective. Hopefully you kind of get an idea of where he was coming from. I think, in the future, I may have him on here just to, get more of a conversation going. I love my friends very much. He's, like I said, a very brilliant person. When we were talking today, I called him to ask permission to, talk about this today on today's channel. And what he said to me is like, I care about making money more than I care about being right. So convince me to get rid of my short positions and invest in Tesla. So I don't know if I've convinced him yet, but hopefully he starts watching this channel, and over time he kind of starts to see some of the things I'm talking about and does his own research, and maybe he comes to the same conclusion. But at the end of the day, it's all about listening to other people, taking in their thoughts, and then we distill what we think for ourselves. All right, we're gonna leave it there for today. Don't forget, do me a favor, hit the like button, hit the subscribe button, ring that bell. I love you all. Peace.